at least some of us felt, that the steps that have been taken after Bear Stearns, such as opening up the discount window to the broker-dealers, was not enough. That more aggressive action had to be taken. So it was frustrating seeing not a train wreck happening in slow motion, but understanding that the trains were moving towards each other, and that there was still plenty of time and opportunity to get one onto a siding. But if action weren't taken, there was still a real risk. I actually think that it's somewhat of a mistake to look at the failure of Lehman as truly the beginning. It was the prior weekend when Fannie and Freddie failed, where huge amounts of value were wiped out because the preferred stock, which was trading at decent levels, went down to close to zero and created a lot of havoc. It also created now uncertainty as to where the government would be. Bear Stearns, they protected certainly everybody other than the common stockholders who got a pittance. In the GSEs, they wiped out the preferred holders. So now people were beginning to become concerned about, could the government go one step further? I just assume and don't know that it was thought that with that period of time, that the impact of a failure of a major institution could be understood. To me, that was, if that was the view, that was a major mistake, not because somebody could have predicted the failure of Lehman would have this catastrophic impact, but because you have to understand what you don't know, how limited the sources of information there were. And for example, could I or anybody else, I don't know of a single person who said that the failure of Lehman would lead to a near collapse of the money market funds. But what I think people should have understood was that it was just unpredictable. And you don't take a chance with the financial sector.